I'd like to discuss the outlook for pre-owned business jet pricing in 2023, or I like to say, catching a falling knife. Further, I want to talk about strategies for buyers and sellers. The way we'll do this is first, discuss the direction the market's moving. It's moving down, but off an all-time high. Second, discuss the speed the market's moving. And third, the expected depth of the trough. We aren't sure exactly where it'll bottom out, but we want to discuss the factors that'll affect that. Lastly, the strategies and tactics to best achieve great aircraft asset management in 23. Our goal, since we can't affect macroeconomic conditions in airplane markets, is to make well-informed, confident decisions. So let's get started. The pre-owned airplane pricing outlook is fairly well understood. Prices are falling, down 10% already from the high water mark. Inventories are rising. Recession is looming, certainly enough conversation about it. Let's talk about how far prices will fall and how fast. And we'll start that with, when did the pricing wave crest? When did it top out? The pressure started in the fall of 22, when for sale inventories started to expand. That's a relative term. Inventories expanded from 1%, 3% as we got into the fourth quarter, to their current level of 5%. Historically, 5% of a fleet for sale is wonderful news. It's just the direction and the speed the percentage is moving. Transactions per month slowed down as much as 30% from last year and stopped for some older models in the last 2 quarters. During October and November of 2022, the metrics were deteriorating for pricing, which remained stable based on typical 4Q financial and psychological factors that favor concluding business. On or about the 1st of December, pricing fell and it flipped 10% overnight. The trigger was the inability to execute a contract, conduct an inspection, close and put the airplane into service prior to year end. Our prediction is that airplanes will be worth less in 23, and that came true at the end of 22. If we agree on the direction, let's next discuss how far and how fast. Let's look back into history for momentous market changes. In 2009, we saw pricing fall 40% in 12 months. In 2020, during COVID, pricing fell as quickly as 30% in 90 days. Before we project into the fall of 23, let's talk about the climb in 21. Popular models climbed as much as 40% to reach an all-time high. Do we fall back as far and as fast as we climbed in 6 quarters, or return to the historic annual depreciation of 7 to 10% per year in value? Here's an argument for somewhere in the middle. Never a terrible perspective for a further decline of 10 or 20% from the peak last year. There's logic that the largest change percentage-wise occurs early in the sea change. The first 10% happened overnight. Our brokerage business is typically steady in rising and falling markets. It's the turn where we pause, as buyers expect prices to fall and sellers have not quite reconciled to that reality. It's the pause that decreases sales volume, increases inventory, all of which supply and demand, pricing falls. 2023 inventories will continue to grow, but remember, they can still double to get back to what we consider a normal market, 10% of a fleet for sale. Another indicator of a healthy market is the equipment manufacturer lead times for new aircraft, now typically longer than 2 years for popular models. This assures quality pre-owned inventory supply. New buyers tend to take great care of their existing equipment, and this contributes to a stable supply with predictable timing. Let's talk about COVID, looking at unrelated factors to economic conditions. That's what drove the pre-owned pricing so high. The high net worth COVID-motivated buyers, backed by an all-time high stock market in the summer of 2020, started buying. The high net worth individual tends to have a shorter ownership cycle than a corporation, so 3 years in many cases. So we're seeing the second airplanes for many of these clients. We expect this trend to continue and consider it a stabilizing factor. Let's talk strategy now, moving to strategy and tactics for managing your assets. That speaks to the title of the article, Catching a Falling Knife. We can't predict all the pricing factors, but as a pure seller, selling sooner is better. Contrary to the conventional wisdom that a fire sale is at a lower price, the gloomier your view of 2023, the faster you want to sell. On average, it costs $220 per day per $1 million of value to sit in the resale market. Extensive and timely market information is critical. For a buyer, time's on your side, and keeping abreast of the markets for quality inventory is the order of the day versus the incredible pace of transactions in the recent past, where on more than one occasion, we rushed into the market due to the availability. For an owner upgrading from an existing aircraft, time works for you again, with your focus on the buy side, where you save $2 buying for every $1 you lose selling. For an owner downsizing, speed is your friend. The Norman Jet transactions is typically buy high, sell high, or buy low, sell low. To optimize buy low, sell high, our favorite is accurate, timely information. In addition to market conditions, there's a host of operational behaviors that'll help you keep the value of your airplane as high as possible, regardless of the market conditions. Considerations such as cosmetics, maintenance status, serial number, birth order, model selection, avionics generation, and record keeping are all integral to maintaining value. While being the next airplane to sell is always important to a seller, it's crucial in down markets where time to sell expands. Please reach out and let us know if we can show you any of the tools we've built to help you achieve your goals. Thanks so much for watching.